Hello, buddy. This Euro setup. First off, I need to apologise. I live right next to a farm, and the cattle are making a complete racket. It's feeding time, so if you can hear some weird noises in the background, it's about 40 or 50 cows all shouting their heads off. Anyway, that aside, looking at your Euro chart, the first thing that I would say uh, is iffy about it is the depth of the three candle reversal. If you if you've watched any of my three candle reversals, you'll hopefully see the one that says shallow versus deep or unshallow reversals. If you do a search on YouTube, just type in shallow, I think that will give you the correct video. And what I mean by that is, you know, this is a shallow reversal. That's the penultimate, that's the ultimate, that's the reversal. So your stop would be somewhere around here, and potentially, you'd enter and you've got a tiny stop and a decent reward risk to the next resistance. This one, uh, technically speaking, your stop needs to be somewhere like up here, which is definitely not tiny. I mean, strictly speaking, if you could, in a perfect world, your stop needs to be below 1, which would be that there. But I always say, as long as it's below some sort of resistance, so that the price has to get through resistance and support to get to you. So resistance is, in this case, it's support, and it has to get through that. Fail to treat it as resistance, and then pop down. So unshallow, shallow reversal. That's the first problem. The other problem is we've got a mass of support and resistance here, a great big level. Resistance, support, support, and a tiny distance to the you know the available sort of supply area, if you like, or demand area in this case. Sorry. Um, so that distance there from a potential entry. We've dropped below the dragon. I can see that we're pulling back now. So a break below the line chart would be around somewhere around there, and you've got about 7 or 8 pips. Very debatable whether it might just reverse off of here because it's found buyers. This is where the buyers are, so it's very, very tricky. You want a big gap. If you were looking at the 1 minute, this is the comparison we can make. The 1 minute chart, bearing in mind it was overextended, so it's all good. This one, the entry was here somewhere, that's your pop down below the dragon, that's your pullback, that's your consideration. Still not the shallowest of stop losses, of course, but you've still got the same support area down there. So a potential entry based on that 3CR there, and a break of the low there, which would give you a better, well, basically what I'm saying is the trade is over. So that's why, it's, if we go to that GJ that I was looking at, so it's a bad trade, in other words. It's there's too much noise below us. So if we look at that GJ, if it will actually change for me, come on, chart, change. I think I might have got too many different bits of software going. It's very tempting to think, okay, so we're going to move into the next phase of this. I've missed this trade, and the trade was, there's divergence there, and I'd set it all up with the divergence and the ascending trend line, and I was about here waiting for the trade, and then I got distracted. In fact, the truth is I was looking at stocks and seeing what was going on over there, my new pet hobby. So what should have happened is it should have got into the trade somewhere around here. That was the push down, there's the downtrend. Then it's pushed up and created another uptrend, but a new downtrend, but notice that wasn't broken. But when finally this high, low, lower high, and the break of that one, that's the critical one at that point. We didn't really have to break that, but it's always a good idea to not trade into that sort of area. that was again a pretty good reward risk ratio. That's potentially the problem area there. So if you'd entered there uh, as a result of that candle there, then you would have been 20 pips in the bin, as it were, down to that level, with a potentially, you don't have to be behind the top. All you have to be is behind the problem area. So potentially, let's just say the stop was there. Once again, the entry was around there, wasn't it? That's a 12 pip stop, so that's the difference, or just add the spread on there. It's still a 15 pip stop or whatever. So they are two totally different looking charts, and I hope you are aware of that. Now, what I meant by moving up the time frames, and this is a little a new trick, as it were. Here we've got now the dragon forming the reversal. We've got the break below, so we've got a whole new trade coming into play, and that's something I don't often talk about. And now we've got the dragon, we can really concentrate on it and see how the trends move from a 1 minute potential trade to a 5 minute potential trade. So we've got a whole new thing now. We've got the ascending trend line. We've got a new descending trend line connecting these levels here. We haven't got divergence anymore. That high, is strong on there, so that's a point to take into consideration. And what sort of space have we got below our potential entry? Remember, we're considering entering here with with the price pushing through here, and then with our bust, pullback, break and close momentum trigger, and then we can go to the higher time frame and have a look and see where our problem areas are. Let's move that back over there. Well, we can see this is a whole area here. There is support, there is resistance. So, and that is exactly what I mean. That's the same thing as euro. This was a great trade from up here because we had a nice lot of room. The reversals just started. That's another thing I forget to mention enough. We want to be getting in on the first reversals. You're getting in late, you're basically playing the higher time frames. You're going to have a whole lot of potential accumulation, distribution, sideways, congestion, call it what you like. We want to get in fast, which is why that 1 minute trade was brilliant. And remember, it was a 35 pip move. There was 20 pips given away, and then it had a little play around, and then it went down another 15 pips. So first reversals are the strongest. Shallow reversals are the best risk reward. And if you start getting into these up higher time frame potential reversals, you can see you are going to have problems. We are scalpers, and we're in and out quick, and that's the whole idea of what I do. So hopefully that's clarified a lot of things for you. That euro trade, I hate euro anyway because it takes an age to move 5 pips. I know it's all relative, but I prefer to get the faster moves, like with GJ, for example. Nice 10 pip moves in a few minutes. Okay, I hope that helped. Thanks a lot. Take care now. Bye.